Good morning, everyone. Welcome to the Trading Market Technicals morning call video for Monday, May the 6th. Hope everybody enjoyed their weekend. Friday, we had a big up day in the markets, actually a very good week in the markets, enjoying that better than expected non-farm payroll numbers which came out Friday morning at 8:30. Markets kind of gapped up and just kind of rallied and consolidated mid-afternoon and then kind of pushed higher into the close on Friday. And as you can see here, Dow up 142. We had NASDAQ up 38, S&P up 16. For the week, we had Dow was up 1.78%, NASDAQ up 3, Russell up 2, and of course S&P up 2%. So 1.5 to 3% across the board. We had some good leadership in tech and consumer discretionary, which is positive. Really, that's what you want to see when you have internals all firing on all cylinders here. So we had the semiconductors up 3.5% for the week. Transport's up, which they've been lagging. They are our leaders. They're lagging 1.68%. Retail, big push up, 1.91%. Financials did okay. Brokers did exceptionally well, 4.5%. Home builders up 1.6%. So we have that risk on sentiment, and I like the fact that the leaders are starting to lead now. Big cap tech, Google all-time highs. Apple was a bit lower, actually, even though they were up, but kind of lagged on Friday and Thursday. So we have that leadership role playing and their presence of moving higher, while we have our healthcare, utilities, consumer staples move lower. And I mentioned that many times. It's a really big red flag that all of a sudden we have those three defensive sectors leading and moving higher. Well, that's actually started to change again. So again, relationships change in the market, and that's, as technicians, we need to continue to follow and see what direction and what path price is taking us. Now, we are speaking of price, right? Price is king. Price is what pays us, and this is the reason why I say our indicators are overbought and can stay overbought for quite some time. So our indicators being overbought, you need a trigger. You need something, right, meaning price, breaking some pivotal support lows, making lower lows in order for you to get short in this case. Otherwise, the indicators can read overbought. Now, indicators are grossly overbought as of right now. They're at 97, 98 on a monthly chart. So this is a huge spot where in the coming days and weeks, we look to see maybe we might be able to put on some shorts. Maybe you might be able to do some for swing trades. If that is in your trading plan, I would not be adding longs here. I still wouldn't have, and I still agree to say that last week and the week before, because you just don't know what's happening. If you're long, stick with your longs and just keep trailing stops on the way up. I just would not be. It's not, again, in my trading plan to be buying stocks way up at these levels at all-time highs. And again, what we have indexes moving higher. Individual stocks, aside from big caps, are moving, but they're really not moving as much as the indexes are moving. Okay. Now, another thing that really is interesting is the currency markets, in which I follow very closely and trade. The currency markets are still in their confined ranges. They have yet to really break out of their moves like equity. So that's also interesting to see moving forward. Now, like I say, a lot of people don't trade currencies. That's fine, but you really need to know, and you really should pay attention to a lot of the big currency pairs, Aussie dollar, New Zealand dollar. Those are the big commodity block currencies, Canadian dollar. They're the ones that actually move as well as risk on. They really haven't moved that much. They're still in their wider ranges, if you will. And that's another thing I wanted to talk about. And again, we talked about the defensive equities and why they've been moving into this defensive stocks, such as the utilities, the healthcare, and consumer discretionary. And you kind of figure it out, you kind of realize it. Money was coming out of utilities in the last, 30 days, 45 days. And also, you have the higher yielding yields that were in play in treasuries. And that is nothing more than a rotation from treasuries to defensive equities. And I think that's exactly what happened and what played out, and reason why defensive sectors were running up. The money was coming out of treasuries and into that defensive role. Sort of the same category, if you will, right? Treasuries, defensive plays. Well, since the Fed is just printing tons of money, why be in treasuries? Might as well be in defensive sectors, and I think that's what played a major role in the move higher. Okay, so that is something that I was trying to realize, and I kind of realized that now we just need to see which way this market is headed. And I honestly, everything is chugging higher. But again, guys, without a decent correction and a pullback, it's a scary time to be totally long 100% in your portfolio at these levels. Now, mind you, it's a great time to be long if you're holding positions, but you really need to be cognizant of where we are in the markets and either tighten up your longs or buy protection, which I'm totally into buying. And why? Because the VIX is so low. And I'll show that to you in a moment. It's cheap to be buying protection in your portfolio. And again, you don't have to, but maybe just tighten up some stops. I think that would be the best thing to do. All right, so let's go right into the charts here, and you will see our bullish percent. As you can see here, still making lower lows and lower highs, right? But we are reading overbought, and we did get back up to this trend line. So we are overbought while the market is at all-time highs again, right? Take a look at our copper. Let's take a look at copper for a moment. Copper daily was extremely oversold, was due for a dead cat bounce, and look at this huge engulfing candle. Now, we did break the 20. We're going to have some resistance up here at 335, 340. 50-day moving average comes in there, but a nice big day. Again, helping was the non-farm payroll numbers, the jobs data that came out was better than expected. I also think you're going to have, you say, okay, well, the economy is chugging along, so you're going to have a better economy, which would be better for stocks, obviously. And if numbers are worse than expected, which they have been really for a couple of weeks, right? ISM numbers were bad. You're going to have the Fed continue to print money. So it's a win-win situation for the bulls. But again, if you're looking to buy in the market, now is definitely not the time, the place to be buying the market at these levels. Okay, so we'll take a look at the weekly chart of copper. And as you can see here, one week, so we did have an outside week reversal. We'll see where this takes us, but again, you're going to have some heavy resistance back here at the 340 area. All right, take a look at the, I want to show you some emerging markets. Now, as much as we had a big move up in equities, we really didn't have, we did have a nice little move up higher here, but again, we did bounce good the last 2 weeks or so, but I'd like to see this actually start really leading and start taking out the highs here. Same thing with China. China really is lagging big time, as you can see here, and I do think that is the canary in the coal mine in the coming weeks. Take a look at the NASI weekly. Went on a buy signal last week, so let's see what happens. Could be a little choppy. When we get into this area, I like to see what usually works best is when the stochastics roll all the way down with price, down to these oversold areas or these overbought areas, like we did here, and we rolled and we had a sell-off for a few weeks. But when you get into the midline here, it usually is a false reading, some sort of a choppiness. So you might have another week up and then they start to roll. So we'll just see what happens here. But this is not such a great signal right now for the NASI. Take a look at the new highs, new lows. As you can see here, we're at these lofty levels again. We're back up at these levels. And when you get them, right, what happens here? We get that little sell-off. And you got a little here, little sell-off here, a sell-off. So all cards are reading for a pullback. Again, when does it happen? No one knows. Take a look at the stocks above the 50-day moving average, and I've been showing you this. We had some little divergence here. Now we're back up into this trend line. Again, higher low off of the high, higher low, lower low, and again lower low while we're making new highs. So again, stocks really aren't moving, although they did move a little bit better on Friday. But and if you really had to be long coming into Friday to really make any substantial profits, because once it gapped up, it just slowly grinded higher, and pretty much stocks started dying off at the end of the day, at least mid-morning to the end of the late afternoon session. Okay, and let's take a look at the VIX. And this is another thing that's concerning to me, right? Just as the big picture is concerned, VIX at hanging here at the lows. Now, with a big move like that, you would think that the VIX would be really taking it on the chin. That's not the case. Take a look at this. VIX was only down 74 cents. So the options market is pricing in some fear. And take a look at the put-call ratio at 90. Did close bullish, but this is what I would expect. 55, 60, 65. With that whole euphoria of buying stocks, the option market is not doing that. It's telling us that there is fear out there. Okay, not again, not at these levels, but you have to understand that's one of the reasons why I like looking at the options market, and it gives you a good gauge of fear on, fear off, risk on, risk off type mentality. All right, let's run right into the charts, and as you can see here in the S&P, the cash, we have lagging CCI. However, price did manage to run up, and that's all that matters is price, right? 1625 will be your next pivotal resistance area, your big resistance area, which would coincide nicely with this upward channel and this larger uptrend channel here that's marked in dark red. Okay, 1600 is now support, 1576. So I mark these and I leave these here for you guys in case, just for reference, if you want to write these down for your own charts. Here's the monthly, and look at the reading, 97 on a monthly chart. I would not be buying stocks here. I'd be looking for some sort of a pullback, maybe back into the 155-ish area, even 150 area would be nice. But look at when you have your price extended way outside your 8, which comes in at 148, let alone the 20, which comes in at 138. This tells me this is not anything enticing to be looking to buy stocks here, especially on the SPY. And when you have readings in the monthly charts, way grossly overboard. Excuse me. Okay, weekly outside week reversal broke out of this area again. Back at the 83 area, MACDs are very extended, and we are outside of our Bollinger Bands in on the weekly chart. So if we break back in, that'll be a sell signal for the markets in itself. Okay, and you can see here spiders. You can see that the Dow and the spiders are actually the bigger winners on this move up, and that's not what you want to see. But again, if you're following price, that's what matters. Price pays. And here's a 60-minute. I had this head and shoulders pattern. We had the head test. We failed, and then we broke higher. I took this off. This invalidates the bearish pattern, right? And it only validated if it broke 153.75. So now we had a gap up. What am I looking for today? Well, I would love to see a gap up and fail. If we had a gap up and fail, we would easily at least fill the gap and then reevaluate where we go. Where does the market go from here? So I'm looking for a little bit of a pop and drop type mentality early this morning to see what happens. Don't forget, we have no economic data today, so it's all going to be based on technicals, guys. 30-minute chart, just to show you, it broke out of this consolidation area, big gap up. So again, one day doesn't make the trend that we move higher. We did break out. Well, we'll see what happens. We'll see if this market has any more legs and enough juice to move higher into the 1625 area. That in itself, guys, if we ever get to the 1625, I would be looking to short the market. That is no question. At least the first shot up there, I would be a better short seller up at those levels. Here's the IWMs. As you can see, IWMs are lagging. We did get a pop up, but actually, if you can see the tail here, we actually sold off and ended up closing near the lows of the day. Still positive, but this is not what you want to see one of the leaders. Transports, same thing. As you can see, we did pop up. We did break this long-term uptrend line from November, but we're still on a sideways consolidation here. So let me just get rid of this. And as you can see here, we're still consolidating since March. So transports are definitely lagging. Diamonds popped up, broke back up, but then we failed. A little doji candle here. Now we're just sitting to see where do we go from here. Same thing. Markets are extended. Now we did have that move. We did get that big pop-up, but what you want to see is now we have to take out Friday's high or take out Friday's low, and then we would fill the gap. Here's Goldman. Again, Goldman. Now, this is why I say Goldman is in trouble. And I don't like Goldman not really moving with the markets. And as you can see here, didn't break. We touched that to the penny and rolled back up and created a little bit of a doji. So Goldman hasn't really moved with the markets, and that's something that's concerning. And if you're looking to short something on the next pullback, I think the banks will probably be in play. Here is XLF, popped up, and now we're sitting on top of this. Now let's see if we break Friday's low. That would really get me looking to short that sector in this area here, the XLF. And Apple, take a quick look at Apple. Had a nice outside week reversal, sitting on the 20, and then we have an uptrend line here. So we have a confluence area of resistance. We're going to need to see Apple break a little bit higher. We'll see if it has some legs. But I think Apple's a little extended. I think Apple's due for a pullback. If you look at this daily chart, Apple did pop up and then managed to close with some nominal gains. I just saw this morning on the tape that Apple, something with their iPhones, with their carriers. I'm not sure. I really didn't read it all as well. But we need to really see Apple start to break out of this channel, of this area here, for any additional movement. I think it's extended. I think you're better off buying Apple at 420, at least to test the 420, reevaluate and see where it goes. I do think Apple goes a little bit lower. Really nothing going on with their products up until the end of the summer, start of the fourth quarter. So I think Apple will just be a trading stock for now. Take a look at the Qs weekly, and again, big cap tech. We had a real nice week, which is nice to see. Google all-time highs. Again, big bearish rising wedge. Only bearish when it breaks the lower trend line. Just keep that in mind. So we're at the upper end of this trend line. A big nice outside week reversal, and we'll just take it from there. Take a look at the daily chart as well. As you can see here, I think it's a little extended. If I'm sure everybody would agree. We are outside of the Bollinger Bands here, and we are looking for some sort of a pullback. All right, guys, that's it. A little bit long, but I wanted to get a lot of points out to you. I hope everybody has a great and profitable week. Remember, don't get crazy. Don't get too pent up with the euphoria of just keep buying everything. Be smart with your trade setups. Now is the key, and now is the time, if any, is to be smarter with your trades and your money management, because we are at these lofty levels and we could reverse at any given time. So just use a little caution. Have a great day. We'll speak to you tomorrow. Take care.